Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500, just continues to show strength, up 1.6% for the week. So 2 weeks ago we had a false breakdown right here, and then it shot right back up. This week we've got a new all-time high, although intraday it got up to 6,600 on the S&P 500. The negative divergence here that we're talking about before, so right down here you can see the RSI is gradually moving down while the price is moving up. So this usually forecasts which way a stock price is going to move. And here you can see it's 76, and then we go over here and it's 68, and then we go over here and it's 64. Well, now it's gone back up. Now it's 67. So we are still lower than the one back over here, which is 76, and close the week at 67. Okay, so that is lower, but we got a higher high right here. See how the purple line was moving down, and then boom, it shot back up. That really makes me wonder. It kind of looks to me like the S&P is going to move up higher next week. I mean, we've got some fundamental news here. The Fed is cutting rates next week, which historically has meant that the economy is not having a good time. So I'm kind of surprised that the stock market continues to move up to that. Maybe people are waiting for that moment and then they'll finally capitulate and start to sell. But so far it looks like it's good to move higher. The dollar is down 0.1% for the week. So with the Fed lowering rates, I see support here on the dollar at around 97. And then again, if we follow this little bar right back here, again at 96.37 would make for a perfect double bottom. If I zoom out on this long term, and this DXY chart goes way back here to the 1960s, and we could see it was in a general downtrend, and then coming around great financial crisis, it slowly started to creep up here. So I think this is basically Brent Johnson's dollar milkshake theory, watching it play out in real time here. This parallel channel is pretty convincing to me. I mean, you've got multiple hits right here along the top side and the bottom side, and it just seems to be obeyed. And this would argue that the next move for the dollar is actually up. Now, we're cutting rates like almost certainly here shortly. I'll share my screen here and you guys can see the CME Fed Watch tool, and traders, some of the smartest people in my opinion on the planet, 96.4% of them, I'm recording on September 12th, Friday, believe that they're going to cut 25 basis points, and another 3.6% think that they're going to cut 50 basis points. So the Fed's cutting. It's just a matter of how much. Right now, traders have them cutting 25 basis points. Now, the Fed never cuts interest rates because the economy is amazing and having a good time. They cut interest rates because the opposite is happening. And right now, at least the reason that Jerome Powell gives is that the Fed is seeing that the employment data is starting to crumble. So they're trying to get ahead of that and spur, I guess they're sacrificing the dollar here if they're going to be cutting interest rates and trying to settle out on employment. We'll see how that works out for them. Now, where this really comes into play is if this goes up, historically, our commodities are going to go down, because as the dollar gets stronger in relation to other currencies, it takes fewer of those dollars to buy the same barrel of oil or the same ounce of gold. You guys have heard me say that like a broken record. Another thing that kind of plays into the other side of the argument here is M2 money supply. This thing has started to creep up, and so as the M2 money supply starts to go up, chart go up, inflation go up, money supply goes up, there's more of those currency units in existence, so it takes more of them to buy the same commodity. I don't know. I think I'm kind of 50-50 on this. Like, it looks to me on the chart like the dollar's going to go up, but fundamentally to me, if they're cutting rates next week, it looks to me like it's going to go down. As far as like what's it going to do next week, my money is that it's going to go down, probably break through this blue line a little bit. But I think longer term meaning a few months from now, I think we're probably going to get a bounce and have this parallel channel obeyed. We'll see. We shall see. Okay, there's the money to M2 money supply. On to the 10-year yield. So the benchmark for the price of money is down 0.2% for the week. So I thought we might have a little bounce here. I guess it kind of came on Thursday, but we closed lower for the week. So is a bit of support right along. If you just follow this straight across, we got some support around 4% for the 10-year Treasury. Looks to me like next week it's probably going to go up. The reason this yield is going down is because people are buying bonds and driving the yield down. Same thing for the U.S. 30-year Treasury. This one's down 1.6% as of from last week. And we do have some support right around this level, which it kind of hit a bottom down there at 4.64%. Looks to me like it's good to go higher on yields for next week. And this is the VIX, the volatility or the fear index, as it's historically called. And basically it looks like a dying heartbeat, so the market is not fearful. And like Yoda said, they should be afraid. You will be. All right, and I mentioned a week before last that I thought it was criminal that Janet Yellen didn't issue all the debt out on the 30-year Treasury yield. And several of you wrote in saying that basically there's no way she was that stupid to not recognize that, right? Like, had she been able to put it out on the 30-year note instead of a 2 or 3 year note, like what she did, then she would have done that. And now that I think about it, that like it is blatantly obvious, like you should be putting it out on a longer term instead of a short one. The reason has to be that there was no demand. Like if there was no demand for people to buy those 30-year Treasury notes at such a low interest rate, then no one's going to buy it. So they couldn't do that. They had to do it on the short year term to kick the can down a little bit further down the road, but not much further. So maybe you're right. Maybe that was the reason. Okay, gold is up 0.9% for the week. So just like the S&P 500, we have a new all-time high for the week. Got an intraday high on the futures market of 37.15. So broke the $3,700 mark. On the spot price, it got up to 36.74. So still in contango there. Gold divided by the S&P 500 is looking like we're going to get a little more outperformance in gold here. I think the next little bit of resistance that we got is 0.570. So it hit that to the T on, what day was that? Tuesday. Now, as far as gold itself, I mean, it kind of looks like we're topping out here. I sent out an alert to premium members on this candle right here, or bar, I should say. This one right there. Wow, I just circled 3 of them. Let's try that again, Steve. Okay, that one right there. There we go. Okay. See how it kind of looks like a candle that, like an upside down cross. It kind of looks like that. That's what we call, like this bottom part right here, that's a topping tail. So it basically means that although the price action did get up there, it opened and closed lower, so it's likely to go lower there. Although it didn't correct quite as much as I would have thought it did, it has kind of rounded out here. So I'm a little torn on which way I think gold is going to go next week. The RSI is still moving up, but we do have a bit of a forecast here in the MACD. And see how we got kind of the hump in the MACD and it's starting to roll over a little bit. I think we're starting to run out of buyers here. Volume's running down a little bit. If there is going to be a week where it settles lower, I think it's going to be next week. So that'll be interesting to see. But I'm like 55% lower, 45% higher. The Fibonacci extension work that we did the last couple of weeks shows that the next upside resistance is going to be 37.51. So we got within, what is that, 15 or 35 bucks of that, 36 bucks of that. So pretty close. We might actually get up and touch that, but I don't know. I've heard other people say that this is kind of starting to look like a bull flag. I hope you're right. I hope you're right. I'd much rather see this move up than down, but we are getting really, really stretched. I mean, here, if I go out to the monthly here on gold, like that is just a parabolic move. That looks amazing. But okay. All right, moving on here. And let's see. Zanzibar says, I wake up Sunday, check in with Steve Barton, see that we are still winning, go bass fishing. All right, I love that. He's a poet. He didn't even know it. All right, PHYS. This is physical gold on the stock market. You can buy with a mouse click. up 1.6% for the week. So new guys to the show, this is where you start. If you want a gold position, start with a physical commodity first, and these red, yellow, and green lines. This is basically kind of where I see a neat little place to put limit orders, right? We got a lot of price action going back here. There was a triple top right here that got broken through, so it makes logical sense that if this is going to correct back down, that would be kind of a little stopping point for it, right? So I like a limit order there, 26.40, and then $25 for another limit order, and then 24.25 for the one after that. And the way I look at these, the 15, 35, and 50% is basically what I'm trying to illustrate is that, like, as long as nothing fundamentally has changed with the narrative, right? As long as the government hasn't balanced the budget, right? And the bet for gold is still on, as this gets cheaper, look at it as a moment in time and buy more, right? So as this gets cheaper, you buy more. Then when it does reverse and everyone realizes like, oh, the Doge committee wasn't able to do anything, so the bet is still on with gold, you get in the black really quick, right? Because half of your bet is at the cheapest point. All right. And GDX killed it this week, up 5.1% for the week. So we've got a moment coming up here, I think, for the GDX. Had a couple of premium subscribers send me a video. Thank you for that. The GDX is basically going to be doing some rebalancing here coming up on September 19th. And I think we might have a little arbitrage moment where we can take advantage of that. So premium members, stay glued to your notifications. I think we got something coming. GDXJ did even better, up 6.1% for the week. So if you haven't taken any profits, okay, this is PTPOC, past the point of concern, right? So if you green arrows are buys, red arrows are sells, and once you get to this point, it means that your position is free. You've recouped what your initial investment, you've paid whatever taxes you have to Uncle Sam or your local government, and the rest of the money here is on the house. If we're right and that gold is starting to round out here and might have a little correction, then these miners are probably going to have an even bigger correction. And so if you have been buying on these dips, and following these lines, and you are way, way, way in the black, you may want to PTPOC, right? In some of these gold stocks. I don't think it's if you're more of a long-term investor, I also don't think it's a mistake to just hang on here. Even if we do get a pretty good correction in the stock market over the long run, I think that these gold stocks are absolutely going to kill it. And I mean, like here, I'll go to the GDX here and we can look at the last bull run that it had. I mean, like, look at this one, housing market crash, and then just radical move up. You know what I mean? Like, just some big moves over 300%. Now we've had some nice ones here as well. I think we still got some room to go over almost 200%. But yeah, if you ever wanted to take some profits, usually on weeks like this, it's a decent time to do it. Okay, and if you like this, make sure you sign up for our free newsletter. There's no spam. I'm not going to sell your email to some marketing company or anything. It's just you and me and my best ideas for the week. You get an email at 9 a.m. Pacific time on Sunday. I'm sorry, 10 a.m. Pacific time on Sunday. And you get all my best ideas, and you can find that at stevebartonmoney.com, and you just sign up for the free newsletter there. All right, silver is up 3.1% for the week, so this is looking awesome. Went on Liberty and Finance on Wednesday, and we talked about this formation right here of a bull flag, and look at what happened Friday. It broke out. Oh my goodness, what did we do? We just broke out of a bull flag. So basically bull flags right here, right? Iron right across, and then all we're doing is we're just using our handy dandy little measuring tool here from the bottom of the flag up to the top, and then we project this up, and what we can do is we'll shrink this down a little bit and see where the target is, and it puts the target up here around 46. Now when I do a Fibonacci extension on this, the number I come to is 44, and intraday it got up to, now this is the futures market, but intraday it got up to 43, so that's only a buck away from that, but it is encouraging. I mean, it looks to me like silver's good to go higher next week. So that is pretty cool if you're invested in silver. Spot price of silver basically looks the same. Still got some contango in there, so it doesn't look like it's set yet to take a reversal back down. And we have, where are we? Oh, Derek says, look at silver on the 3-month chart. Okay, so we did this last time, and I didn't know what you were talking about, but you were basically saying silver's breakout on the quarterly chart is a new all-time high on a quarterly basis. Okay. Sort of. All right. We haven't quite finished the quarter here yet. So by the end of September, right, then we'll be finished the quarter. So depending on where this right bar is right here, that will dictate if we get a new all-time high, all-time quarterly high in silver. And my money is that we will, because if we just take this green line over here and stretch it out, we can see that there's nothing here that has like hit that's higher than that. So if we go to the previous month right here, or the previous quarterly, we can see by looking at what's right up here, we could see that the close of that was 36.17, right? And then the next highest one over here for a close on the quarterly is right here, and that is back in January of 2011, and we can see that the close was 37.88. So assuming that the price of silver does not go below 37.88, then you are absolutely right. We will have a new all-time quarterly close above anything else that has ever existed, at least in American dollars, with silver. All right, so looking fantastic on the silver charts. Loving our bet on this metal. All right, and gold divided by silver is down 2.1% for the week. So silver outperformed gold by 2.1%. So unless this quadruple bottom holds right here, let me emphasize this. So we've got a quadruple bottom right here in the gold to silver ratio. Pretty close to it. I mean, we're within pennies of each one of these, all right? Or little just fractional ratios. So assuming this breaks down, and I think it will, I think silver's going to outperform gold next week, then this chart should go down and silver will outperform. And PSLV, so this is the silver equivalent of PHYS, physical silver on the stock market. I like limit orders here at 1340, 1275, and then 1175. I moved this up just a little bit because we've had a nice run here in silver. I don't really see any buys right now in these gold and silver stocks. I don't really see any sells either, unless you want to move past the point of concern and kind of, take some profits for being so smart and getting in and just, hanging on through that run. Yeah, this is looking fantastic. Might have some sells coming up here next week, but I don't really see too many this week. Same thing for this one. If you want to move past the point of concern, if you've been in this thing for a long time and you've had more than a double, then I certainly wouldn't fault anyone for taking profits here. I like limit orders down at 55, 47, 50, and 43 on SIL. This one's up 7.1% for the week, and an even more leveraged one, SILJ, is up 7.9% for the week. So let me do a big view right here. Okay, we can see we should probably get close to thinking about trimming on this one. Okay, so we've had these giant, okay, this is going back to 2013, massive sell-off, massive move, massive sell-off, massive move, massive sell-off, oh, we're at the top, right? Okay, so if this is the run where silver goes to 50 and beyond, you're going to want to hang on to this thing. But what if it's not? What if we go up here and then we do another retrace all the way back down into here? You know what I mean? You're going to kind of regret not at least taking something, so might be time to take a little profits in this, the all-time high back here. If I hang out over the all-time high right here, it's going to be $21.61. Okay, so just keep an eye on that. Look at the big picture. Copper, paging Dr. Copper is, what is that? Up 2.2% for the week. So looking great on copper. This bear flag is not really playing out like I thought it would. And the longer this goes on, the more it looks like it's not going to. So kind of interesting here. We're just bouncing right here on the 200-day moving average. That's what that blue line is right there. RSI is middle of the road, MACD is middle of the road. I don't think it really tells us much other than we're in a slight uptrend here. So I don't really see any buys on this or anything, but I don't see any sells either. I haven't sold any copper yet. COPX is up 4.6% for the week, so copper stocks are absolutely killing it here. I mean, just monumental moves. Where are they from our Liberation Day sell-off down here? Up 65%. That is pretty fun. I love making money. Okay, so if we zoom out here, let me go out on the weekly, doing a lot of long terms here. Okay, so we got a bit of a double top that we broke through. Okay, so next resistance on this one that I see is probably going to be up here with a lot of the price action around $57, $58. That being said, we are pretty high in the RSI on multiple time frames here. On the daily here, we're at 77 on COPX. So it wouldn't surprise me if it took a little breather. If it does, you got your limit orders in at 48.50, 43.60, and $40. And COPJ, unlike COPX, is down 1.7% for the week. Looking a little, is that right? Is that down for the week? Yeah, 1.7% for the week. Okay, so pretty bearish candle or bar on Friday. Opened high, closed low. Not a huge amount of volume. Volume is going up here though. But remember, limit orders only on this stuff at 26,000 shares traded for the day. So my kind of kindergarten method is if like you can do a market order, generally speaking, I think just about anybody watching this show can do a market order if you have about 600,000 shares traded every day. You know, if that's your average volume, we're probably fine doing a market order. But when you've only got less than 30,000 in one day, you do not want to do a market order, or else you might be one of these guys that ends up thinking that you're going to sell at $30 and then it ends up closing at like 28 or something. So don't be that guy. Like limit orders here at $25.50, $24.25, and $22.50. And if you like charts like this and you want to play moves like this, then check out our technical analysis series. You get over 3 hours of video content. And I show you, the first 30 minutes actually is me showing you click by click how to set up your charts like this. So you get all the indicators, show you how to build your watch list and the RSI and the MACD down here and how to read them. You get my favorite patterns and indicators so you have a better idea of when to buy and when to sell. Take the fear out of buying and selling and we make it fun. So this is what Abdi had to say about it. Excellent introduction to charts and technical analysis. I'm really enjoying this course. Using the tools and analysis overviewed by Steve, it makes it a bit easier to make some decisions when it comes to buying or selling. The information provided in this course, I'm able to better navigate the decisions I have to make. I wanted to get a little more knowledge about the technical analysis, and this course is perfect for me, and I would highly recommend it. Thank you very much. You can go to the link down below or go to our website, stevebartonmoney.com, and you can claim it right here, and it will take you straight over to our technical analysis series. Just type it in, and it will take you right to it. Alrighty, and moving back to the charts, we are moving on to uranium is down 0.7% for the week. So we had the World Nuclear Association, the conference happened last week, and I expect in the coming weeks that we're going to have a general move higher. So we can see these little green dots here are the spot price of uranium. We have a general trend line here moving up. Although this week it's down slightly, I would expect it to kind of hit around 74, maybe $73 next week and kind of move back up. One easy way to bet on that is SRUUF. And let me get rid of some of these lines. There we go. This one is down 5.5% for the week. They bought another 100,000 pounds of uranium, up to 69 million pounds unavailable to utilities. Premium members right here got in right on this spot, and this is kind of a setup I'm seeing right here. So we do have a bit of a cupish pattern. All right, so if we go right here, we can see there's a general cup forming and then coming down for the handle. Now this one candle here makes me a little nervous because it fell down so far. If we're going to run this as a cup and handle, you take the bottom of this up to the right side of the candle, Ideally, you want this to iron out around the 38.2% retracement. We don't want it to go below the 50% retracement, which is where it is right now. So if this were to kind of grind sideways a little bit or bounce up on Monday, Tuesday, that might be a neat place where you can make another entry point. The thing I don't necessarily like about that is that the Sprott Physical Uranium Trust is not at a discount right now. Well, it is at a discount, but it's not at our massive discount that we're used to placing bets, like when it was back down here and it was at like 9 or 10. Okay, so I'm still holding out on what I have left in my uranium bets. I believe uranium makes up about 10, maybe 11% of my portfolio right now. So I'm hanging on. I trimmed a lot, but you know, that was when we were pretty high up. But yeah, I'm hanging on. We'll see. We'll see what information was gleaned from the WNA Council. We're gonna have Justin Hune back on the show, and we'll get some insight into that. All right, and URNM is down 0.4% for the week. So if you haven't yet, you could take profits now. We had the Liberation Day sell-off. So Liberation Day was, you know, when Trump brought out his chalkboard with all the tariffs and, you know, China's getting 150% tariffs and all that, right? And stocks just sold off, and so did uranium. The part that makes me a little nervous now is we got the Fed cutting rates soon. Usually when that happens, stock market starts to sell off, right? Uranium usually gets taken down with it. So if you have not taken any profits here in uranium on the way up, I've been trimming on the way up, but if you haven't done that yet, might want to take some profits, you know. URNJ, basically the same thing, down 0.9% for the week. Same thing here. I don't see anything wrong with taking profits now. We do have some bullish news coming up with the WNA Council and all the information, all the deals that happened out there. But, you know, at some point you got to pay yourself. And we are kind of tapping towards the upper end of this chart. The last time we did this run, it went up 125%. And so far during this run, we're not up 125%, but we're up for sure. And it got up as high as 117%. So not quite 125, but close enough for government work. All right, so got to think about paying yourself. And where are we? URNJ. Okay. If you like setups like this, like you see right here, then you want some real-time updates, you're going to love our premium service. When you sign up, you'll be grandfathered in as long as you stay subscribed. Your price is never going to go up. You get the company-specific stocks I'm buying and selling with my own money. You get real-time updates. And here's what some premium subscribers have said about the upgrade. Paula says, thank you for offering this service. I like your work very much, especially your knowledge of the charts in order to know when to buy and when to sell. Rory says, I've been watching your Monday market moves and appreciate your analysis and guidance. I've made a change to my own investments this year, and newsletters like yours are very helpful. I'll be taking your technical analysis course as well. Well, thank you very much, guys. You get my company-specific stocks. So instead of the ETFs, we get company-specific stocks that have a little more alpha in the portfolio and can give you a little more upside. You can sign up at stevebartonmoney.com, and myself and my team would be honored to serve you. Okay, let's move on to crude oil is up 1.3% for the week. So if we go here to the daily, we have a little bit of a double bottom, went up a little bit, and then came right back down, almost touched on this trend line. Will be interesting to see if this trend line holds. If we are going into a recession, it probably won't. So far, Philip, it looks like you're right. Don't short oil. And XLE, our favorite oil and gas ETF, is up 1.4% for the week. So briefly talked about this one, and see this setup right here. So we're just taking a Fibonacci retracement from the bottom to the top, come right back down. These two blue lines are the 50%, 61.8. When you go into when you go into trading view here, if you click on the settings, you can click whichever ones you want in here, you know, and sometimes when I get into the weeds, I start adding some other ones. I mean, there's like the 1618 is really strong. So is the 78.6, but just looking at this real simple retracement, I like that it's hitting around the 50 and the 200-day moving average. So this kind of medium blue line right here is the 50. And this dark blue line right here is the 200-day moving average, and we're about to get what's known as a golden cross, which is when the 50 crosses through the 200-day moving average going to the upside, which is a bullish sign. So this was kind of your sweet spot, right in between those two moving average. Nice bar moving, bullish bar moving to the upside. That was your spot right there on Monday. Hopefully you got it. If you didn't, that's okay. Oftentimes what will happen is this will come back down for a double bottom and kind of hit in the same range. And so you can get another entry in right there. After that, I like limit orders at 84.50, 81.50, and 79.25. And natural gas down 3.5% for the week. So still hanging around the $3 mark. Closed the week at $2.94. It is hanging around also kind of in this Fibonacci retracement. So we can see here that bottom to top hitting right around the 50% retracement. My money is, I mean, I'm not super convinced on this, but I mean, it kind of looks like, okay, so this light blue line right here is the 20-day moving average. So that's offering support basically where it is now. But this is kind of a bearish bar looking right there to the downside. So if I had to guess, I would guess that next week natural gas will go lower. And this is FCG. So this is a natural gas ETF. Blew through the Fibonacci to the downside, so I don't think we can really count that, although it shot back up and settled right exactly on the 50-day moving average. So that will offer support. If I had to guess, though, I would guess this one will move down next week as well. All right, and that one was down 0.2% for the week. All right, thermal coal is down 7.5% for the week, so pretty impressive fall here. Basically exactly what Matt Warder forecast, although slightly earlier. So we got down here instead of it hitting kind of lows in October, November. Well, that hasn't come yet, so we'll see. But I drew this arbitrary green line here as basically thermal coal is getting cheap at $100 a ton. We'll see if it gets even cheaper. Last time we were back here in April, it got down into the 90s, so maybe it'll go even lower next week. But nice little sell-off there in thermal coal. Same thing for met coal, down 0.4% for the week. Still seems to be following this gradual trend down. We interviewed Matt Warder right over here, and he basically forecast that this is going to go into shoulder season and get cheaper. And so far it has. All right, and our favorite coal ETF, appropriately spelled COAL, down 2.5% for the week. So far this trend line is just being obeyed. And we got 1, 2, 3, 4, and a fifth hit right here on Thursday and Friday. We'll see if it just follows this 50 moving average, 50-day moving average on the way up. If not, I like a buy around now, $20, and then another one down at 18.75, and one after that, 17.75. Golden cross here, 200-day moving average, a lot of support underneath. I like this one a lot. Limit orders only. And platinum up 1.8% for the week. So we may not get the sell-off that I was hoping for. The longer this goes, the more I think it's not going to happen. Got a basic like big bear flag right here that I thought would have broke to the downside by now, but that hasn't happened. So I'm starting to think that an entry now isn't terrible. You know, I mean, if you didn't get in on these $900 levels that we were talking about for a year and a half, you just weren't part of the show. This is where you are now, right? And we it seems to be obeying this 50-day moving average. We have a rising 200-day moving average. It's not the best entry, but it'll get you in, you know. PPLT is the physical platinum on the stock market. I like a limit order at 120, 110, and 100. Or if you don't have any, I don't think now is terrible. You know, kind of the same thing, kind of obeying that 50-day moving average. And we might have some catalysts for that one coming up. Platinum divided by gold, there it is let's see, platinum outperformed by 0.9% last week. So we had kind of this bear flag here that looks like it played out to the downside, got a little bump this week. We'll see if that continues. We have a question here from Core. He says, I have a platinum coin. How can I make money from it? Okay, well, this is how you do it, Core. We'll go out long term here. This is platinum divided by gold. So the way you can look at it is when we're up here on this end of the chart, right? Platinum is really expensive and gold is cheap. And when we're down here on this end of the chart, platinum is really cheap and gold is really expensive in relation to one another, right? So now that you have your platinum coin, consider yourself in here. And as the ratio goes up, like let's say gold doesn't move and it stays at 3,700, right? And let's say platinum goes to 3,700, well, then you simply trade that platinum coin for one gold coin and you just made money, right? You're trading an industrial metal for real wealth, gold. And this is my plan. If you want to pause the video and read these if-then statements out, basically my plan is to trade and trim on the way up of this ratio. I'm not paying attention to price on platinum. I'm paying attention to the ratio, and that ratio as it compares to gold, and to this one, silver. So platinum divided by silver, still historically cheap. Platinum underperformed silver last week by 1.2%. So this one's even cheaper. And same thing, you can see throughout history, you can trade over 100 ounces of silver to get 1 ounce of platinum. And right now, you could trade around 30 ounces of silver to get 1 ounce of platinum. Pretty cheap. All right, we've also got the New Orleans Investment Conference coming up, so it's less than 2 months away. I'm really excited. I got my media passes and all that. The missus and I will be out there. It is November 2nd through 5th. These conferences are also where I get a lot of the companies for the premium portfolio. I would love to see you out there. These conferences are my favorite because I get to see and meet you. It's really cool to meet the people behind the avatars and behind the screen names. There's a link down below. It's an affiliate link, so if you're going to go, please use that link and support me in the process. It will not cost you an extra dime. I look forward to seeing you there. The Bloomberg is up 1.3% for the week. And let's see, I raised up this line just a little bit, I think like 50 cents or something. So not much. I like 102.50, 100, and 96.50. And John says, how do you trade the Bloomberg index? AW1 exclamation point, can't find it. Okay, so this AW1 exclamation point, this is simply TradingView's symbol so that traders like us can look up the futures of the Bloomberg. Think of it like this, okay, like the S&P 500, like Vanguard has their own fund to buy into the S&P 500 with their own management fees and like that, right? And their symbol is VOOG. So if your brokerage account is on Vanguard and you want to buy the S&P 500, you buy VOOG, and they simply track all the funds in the S&P 500. You're going to have something similar for this. So whatever your brokerage firm is, look it up on that, do your own due diligence, but it's not going to be this symbol, okay? It's going to be something else depending on what your brokerage is. And but basically what you want is you want something that tracks the Bloomberg Commodity Index. And if you can find that on Schwab or whatever your brokerage firm is, then you're probably good to go. Okay, nickel futures is up 1% for the week. Oh, thanks for the question, John. I like the ones like that. It kind of gives a little life to the show. Remember, I'm just standing here in an empty room talking to myself, so it's good to know that we get some feedback every now and then. Okay, nickel futures up 1% for the week, still hanging around that $15,000 mark. Remember, everyone's talking about gold and silver right now. Absolutely no one is talking about nickel, but this is probably the best deal you're going to find as far as commodities go right now. I think we're close to a re-rating, although, it kind of depends on the Indonesian or the Chinese nickel miners out in Indonesia. And NIKL is down 0.2% for the week. I like limit orders here, 1225, 1150, and 1075. So, we're up above 13 right now. I'd let it kind of settle down just a little bit before I got any of this. And PIC ETF is up 1.3% for the week. I don't really see any buys right now, but this is a really neat ETF. If you just kind of like want a one-stop shop for BHP, Rio Tinto, Glencore, Freeport, those big world-class miners that are just kind of all in one thing. And thank you to Joe for putting the word out to everyone about it. And Bitcoin, as of this moment, is up 4.6% for the week. So this one's actually surprising me here. I thought we were going to get a breakdown and continue to go down and at least touch the 200-day moving average. That did not happen. We shot up, even broke through the 50-day moving average. So when I do some of the Fibonacci extension work, I see, well, first and foremost, our next level of resistance is going to be around 118,000, and the only way I know that is just because there's a lot of price action right around there. Then our level after that is going to be 124,500, and that is simply because that's the all-time high in Bitcoin, so that will find some resistance there. And then after that, with some of the Fibonacci extension work, you kind of get up to like 128 is the next level after that. So my money, if I were to bet it, and I'm not, but if my money on Bitcoin for going into next week is that it will probably be higher. All right, well, thank you guys for being here. I love doing this. If you want to play a little more alpha, check out our premium service. Would love to have you. You get a whole nother video just like this with company-specific charts, real-time updates that I'm personally buying and selling. Remember, when you sign up, you are grandfathered in at that price. So thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.